Welcome to Sports Business Journal Inside the Industry. On this episode, we're exploring the shifting landscape of franchise ownership.
The number of people that can stroke a check in their own personal capacity for most of these teams is vanishingly small.
Huddling with corporate partners, boosting the bottom line.
If our subscriptions continue to grow, it will turn out to be one of the greatest deals in sports history.
And hearing from a minor league maverick who's changing the game.
In these markets, they are the show in town.
Join us as we pay a visit to the owner's box on Sports Business Journal Inside the Industry, presented by DXC Technology. I'm Tariq El-Bashir, and joining me in studio are Sports Business Journal Pro Football reporter Ben Fisher, Monumental Sports and Entertainment's President of Business Operations Jim Van Stone, and of course, Sports Business Journal Executive Editor Honest Abe Madcore. Thanks for being here, guys.
Great to be with you.
We all grew up in a time where sports franchises were run like mom and pop shops.
A lot has changed, huh?
Yeah.
Over the years. I remember it was Jerry Buss was in real estate. The late Abe Poland was in real estate. The owner of the Dallas Mavericks was a car salesperson. And now you're seeing much more, I would say, sophisticated and larger forms of wealth.
I think these are global businesses, much more than they were 20 years ago. They were looked at regional businesses. Now you look at, the growth of the NBA in Asia, the Middle East, Africa. I mean, these are really big properties overall.
In the old days, the person who could buy your team very likely lived local. They were affordable enough that somebody in your hometown probably had the money to buy the team. Now, if your team's on the market, you're very likely going out of the city because we're talking global level billionaires.
Ben's right. They take integrated groups now to be able to do the investment levels, especially when you're looking at the big 4 or 5 leagues. From that end, these price tags are exorbitant.
How about investment? How has that changed ownership?
Well, these numbers are just so much bigger than they were not that long ago, and that's a good thing for the people that own these teams and that intend to buy them, but it's more complicated. Even someone like Josh Harris, who's extremely successful, needed to put together a group to buy the Commanders, for instance. The number of people that can stroke a check in their own personal capacity for most of these teams is vanishingly small right now. That has implications across the board in terms of what kinds of minority partners come in, how you put these deals together. The complexity just grows exponentially.
All right, let's take a closer look at some new forms of ownership.
Sports is a unique asset class. It's about $1 trillion industry, and it's actually one of the few asset classes everybody wants to be a part of. Over a 20-year period, if you were an investor in the stock market, you would have made 7.7%. If you were in any of the major leagues, the composite of those 4 was around 11.5%. So that's literally, you would have made 50% more if you had invested in sports. These teams have become worth a tremendous amount of money. If you look at the Commanders, which was the last sale, that sold for $6 billion. It's not a family business anymore. It's not a small business. You're going to see private equity coming in a pretty big way. Sometimes a team is going to raise money to make improvements to the stadium. Sometimes a team is going to raise money because they want more money to spend on players. So the leagues are recognizing that there's more demand and there's more interest, and what they're trying to do is open it up to allow investors to come in and be part of these leagues, be part of the growth. So we thought we could come in and invest and get some pretty good returns.
Ben, what defines private equity funding, and how is it kind of worming its way into pro sports now?
Right. Well, one solution to the problem of these teams being so expensive that very few people can buy them is people pool their money into a private equity fund and deploy it through the management of a couple of people who are in charge of other people's money. But it's complicated for pro sports teams that have always been owned by individuals. Now we're bringing in these funds who are brutally practical. They need to see a percentage return. They're not in it for the thrill of being a sports owner. They're in it to make money. And that brings them in with a bit of a different perspective.
Operating on the local level, though, off the court, the ice, we all want healthy businesses in every one of our markets. It's really good for the leagues. With private equity money coming in, we've got to run as really diversified businesses. So sharing best practices of what future opportunities are or ways to enhance your overall franchise value, I think is good for everyone.
the investment comes with some assets. Like if you're investing $300, $400, $500 million into a sports organization, you're also bringing to bear all the reach, all the connections, all the, I would say, the advantages that a Arctos or a Sixth Street or an Aries management can bring to an organization. Maybe they have new ways of thinking about sales, marketing, media, distribution, analytics, and those things are very valuable.
So on top of the need for a return on investment quickly, like what are some of the other pitfalls or challenges of private equity?
Who gets all the information? It used to be one main owner and a couple of minority owners would share the financial reports from the league, and it was a tight circle.
Right.
A private equity fund might be 50 people who have a lot of money in that, and they want to see the reports about the profits and the losses. That many people get to see them. Maybe it gets to me, and they don't want that.
Right.
So how they structure even just the confidentiality rules around these firms is a big question.
I mean, MSE has a large group of owners. Ted is the majority, but then there are a number of people below him. Yeah. Is it sometimes hard to kind of make sure that everyone is speaking with a unified voice? And
I don't really think so. If the managing partner has the right mindset, and is inclusive from that standpoint, it really can work very, very well. I mean, we've been very fortunate. Our ownership group, and there's a number of people on the cap table, are who's who of the greater Washington area. A lot of them are tech pioneers. They've gotten us to think differently about the business. And also, if you've got an incredible leader at the top, the chemistry works throughout the entire ownership group.
Well, guys, we all know how an owner has a big impact on their franchise. Coming up, we'll look at how quality leadership can mean the difference between winning and losing on and off the field.
A new era of Washington football is here.
And we'll hear how corporate partnerships can improve the fortunes of a team and its sponsors.
It will turn out to be one of the greatest deals in sports history.
That and more when we return. Presented by DXC Technology, the official global partner of Monumental Sports and Entertainment. Whether in a C-suite or on a sideline, effective leadership can make all the difference. Let's examine how the new owner of a troubled franchise took command.
My ownership philosophy is that I actually don't own the team, that I'm a steward for the city of Washington. My job is to win for the city, to connect with the city, and to build a franchise that people can feel great about. The growth of sports has been so enormous that the size of some of these entities they're becoming global media companies. And so the ability for just individuals to carry the capital strain to invest in these businesses is getting hard. I mean, obviously, if you're going to spend $6 billion on something, truly, it's on you, right? It's ultimately on you. You're competing against very smart people. They all want to win too. So you have to develop all these edges, sports science and analytics and being attractive to players and a new stadium. And I think all that stuff builds into a winning franchise and a winning culture. I felt that it was really important to be visible, to be on site, to be at every game, to be there for practice, because I felt that the organization needed some stability and explain to the fans and the community what I stood for and what we were going to do. We're so happy that you all have joined us on our quest to build an elite franchise. I know we're going to do it together. We want to create a culture in Washington where the best and the brightest executives, business, coaches, front office, everyone say, we want to be at this place. And so to do that right, you have to treat people well. If you're treated respectfully as a fan, as a supporter, then you're very appreciative. And if you're not, you turn off.
Thank you. You guys showed up in droves.
I focus on high performance cultures as well as cultures of respect. It's a very consumer-facing business, a very public business. It's really important how you conduct yourself. We're on a long journey, and we really care, and we're going to hopefully bring Washington along with us.
How important is an owner's leadership style to how an organization is run?
Oh, I think it's everything. You need an owner that's very communicative. You need one that's very transparent in the way they operate the business. You have to have someone that's very collaborative in their approach to it.
But there's a certain hard to define cultural aspect of being an owner too. What actually makes a good owner? And
you know it when you see it, but it's hard to describe.
And you know that, some teams in sports consistently make good decisions and some franchises don't. And the only common thing is the owners. But exactly what that owner is doing badly, sometimes it's really hard to put your fingers on it.
Owners get involved too much. It's often trouble.
That's generally the first mistake they make in an ownership situation, where they try to make decisions on player personnel and they basically micromanage the operation. They realize that's a recipe for disaster and failure, and they step back and let really talented, smart people run their operations.
And I would say that's probably where a lot of them have made their money over the years, is they've run really effective businesses to grow their wealth because they've hired and built a team around them that can help support some of the initiatives. You need to take that same approach to the business side of sports.
And there's a lot of ego. Let's be honest. There's a lot of ego. Most of the owners I've known over the years, they want to be appreciated, they want to be loved, and so it's a really tightrope that they walk.
I'm glad I'm not one, honestly, because there's so many ways for it to go wrong.
Is it important for ownership to have ties to the local region?
I think that is a competitive advantage. I mean, I look at, our group, and a lot of the folks are from the D.C. region. Ted's a Georgetown graduate. He's a true fan, and I always tease that he's our #1 customer service rep that we have because he lives and breathes by the teams and the performance.
So this is probably going to get me in a little bit of trouble, but I was the beat writer for the Capitals for the Washington Post for a number of years, early on in Ted Leonsis' ownership. If there was a headline or a story that he didn't like, I got a direct call from Ted. Like, he would literally call me and say, hey, I didn't really agree with that.
As I sit here today, at least in 2025, I think a new owner, that could be a good thing.
I would say that's good customer service. I'm not sure if it would be intrusive.
I think there's as much a risk as being aloof and unaccountable and hiding as there is to being too aggressive.
We've seen how much investors are shelling out for these franchises these days. How do they turn a profit?
One of the obvious ways to turn a profit is just sit on the asset and sell it in 15 years when it's appreciated.
They're probably up over the last 10 years 400 to 500% in terms of value. I think it's creating a lot of pressure points to, be able to get returns really, really quickly.
We've been talking about investment. We haven't really talked about revenue, and how important corporate partnerships, ticket sales, all of these revenue streams are to the success of a franchise, certainly something you live every day.
Well, corporate partnerships, from naming rights to sponsored initiatives, are a critical pillar of the sports business. Here's a sneak peek at those coveted deals.
Ultimately, what a brand like Pop-Tarts cares about is sales. And we were so fortunate that after last year's game, we sold 21 million more toaster pastries in the weeks following the game.
Ultimately, you almost need co-conspirators who are in your corner.
We're trying to create a new wave of fans in this next generation, and Sony is a huge enabler and partner to allow us to do that.
We don't know what the business model might be looking like in the future. We don't know what content consumption is going to look like. But actually, if you've got partners who stand shoulder to shoulder with you, you can potentially work through those things together.
The Apple deal for us is really quite simple. We weren't getting enough in terms of exposure, in terms of schedule, in terms of promotion from the linear networks. Now I get all of Tim Cook's attention. All of their ecosystem, hundreds and hundreds and hundreds of people are working on the MLS relationship, utilize their technology to drive subscriptions, drive the revenue that comes from subscriptions. And if our subscriptions continue to grow, we share 50% of that upside. It will turn out to be one of the greatest deals in sports history.
How do partnerships between teams and sponsors come together?
I mean, there's intellectual property, very strong intellectual property from a sports team. Brands want to align with that because it's very powerful in just both a local, national, and global marketplace. And for a corporate brand perspective, they want to move product and they want brand amplification, and sports does that better than most.
Yeah, I would say so. We've got a medium to be able to help them, whether it's, the team association piece, whether it's the branding opportunities, whether it's the media piece, but you have to learn what their objectives are and really do that in a diverse way.
And you guys have been willing to push the envelope envelope a little bit too. I mean, Caesars was different. I mean, that was a first, right? TikTok, that made headlines.
You know what? I think we understand the value of being innovative. I think we really love being first to market in a lot of areas. We had that entrepreneurial spirit where we're willing to take, a risk and be in the forefront.
How do you ensure that this is being done efficiently? Because I hear about these long, deep integrations with a corporate entity as a sponsor.
We've got to ebb and flow with the customer as their goals and objectives change. We've got to be able to do those shifts with them along the way. And I think some of the best partnerships that we've had have evolved over the years.
You've been at this longer than I have, since the early 90s. How's the brand and team relationship changed over those years?
I think it's more than just spots and dots. Yeah. I think it really is about storytelling. I think it's about putting together communication and messaging that really helps amplify the association of that brand with a particular team. It's that constant collaboration, talking, and having the measurement tools to be able to show what things are working and what things aren't working, and being open to trying new things.
All right, Ben, with all these sponsorship dollars rolling in, how are owners reinvesting this money into their organizations?
Facilities for players, training facilities, new stadiums. I just think the standard just keeps getting higher, and owners can't plead poverty anymore. If their players have anything short of the cutting edge in the training room, the locker room, and every part of their experience, the owners are going to be under pressure to keep spending that revenue.
Yeah, I just remember the great story by the leader of the Chicago Cubs. They'd get criticized a little bit for being overly commercial. He said, every dollar I'm making over here, I'm giving to Theo Epstein to put into player payroll, and they won a World Series, and so the fans could understand that.
Well, it's time again for us to test our knowledge with a little segment Abe likes to call the Money Minute. Today's question: what NFL stadiums and NBA arenas currently lack naming rights?
Ouch.
Can you name them all?
Do you think we're in sports business here? What's going on?
Lambeau Field.
Right.
We should have known Lambeau Field.
That's a good one. We probably, I know one is Phoenix Arena. You know what? It's not because of that team and organization business-wise. They're really, really good. They're probably looking for the right partner.
Well, guys, we'll reveal the answers and head down on the farm right after this. Well, it's time for the big reveal. What NFL stadiums and NBA arenas currently lack a naming rights partner? Perhaps the most obvious is New York's fourth Madison Square Garden. That building has had that name since 1879. Next up, the pride of the Green Bay Packers, Lambeau Field, originally New City Stadium. It was renamed for the founder of the team in 1965. 4 hours down Interstate 41, the rival Chicago Bears play at Soldier Field, dedicated to those lost fighting in World War I. And last but not least, we have the Phoenix Suns PHX Arena. It's had a few naming rights sponsors over the years, and they're on the hunt for a new one as we speak.
These are the two smart ones on the panel.
I can't believe I finally stumped you, Abe.
Soldier Field. Come on, Abraham.
Well, one of the latest trends in sports ownership is franchise aggregation. Let's hear from the owner of Diamond Baseball Holdings, whose innovative approach is helping revolutionize the minor leagues.
Minor league baseball has always been a huge passion of mine, and I've followed it and studied it. I had a passive investment that I made probably in 2013 or 14 in the Augusta Green Jackets. I watched a team that moved 2.3 miles from its old stadium to the new stadium and overnight quadrupled its revenues. You just saw the impact that you could have if you get the right facility in the right location and the right community. Minor league baseball, most people don't know, is the second largest attended sport in the U.S. The first 3 years has been about investment in the facilities, investment in the technology and the systems. If we can create better fan engagement, the economics will take care of itself. Within the portfolio today, we have Fresno and San Jose, California, Portland, Maine, the Woo Sox in Worcester, Mass., all the way down to Augusta, Georgia, Spartanburg, South Carolina, all over the country. My thought process was understanding not the 30 major markets that most people focus on, but understanding Tuscaloosa, Alabama, and Knoxville, Tennessee, and Norman, Oklahoma. There are real people in those markets that spend real dollars and have real demand for their brands, and they sell out virtually every night, 70 nights a year.
First pitch, skies it.
When there is a team that is doing something really well, take that, build best in class, and apply that across.
Cubs win it!
These stadiums and these teams are really the centers of energy in these communities. And so there's an opportunity to use DBH as a platform to do other things, whether it is concerts, whether it's real estate development, hotel, office, restaurants around that. You know, it's great for the community, and we are being met with open arms. We need to have a spotlight on minor league baseball. It's a compelling story that I think needs to be told.
Abe, you've known Pat Battle a long time.
Yes.
How has he changed the business of minor league baseball?
Well, they're certainly professionalizing it and making it much more sophisticated. We talked in the show about mom and pop. Minor league baseball was mom and pop. Diamond Baseball Holdings has an equity from Silver Lake, which is one of the largest private equity companies out there. They see real benefit in scaling and efficiencies, and in these markets, they are the show in town.
And I think anyone who's ever been to a minor league baseball game themselves knows that it was a textbook case waiting for private equity. I've been to a particular minor league stadium many times, and I would have spent so much more money there if they knew me and could market to me in a sophisticated way. They were leaving money on the table because it was a mom and pop operation.
Yeah. I love the ambitious scale of it. I mean, I think it's phenomenal. I think it's really hard to connect everything when you have a platform that big.
Yeah.
I love the idea of multiple team ownerships. I think you're better off doing it in one greater area. It's tough to navigate sponsorship. To get one partner to buy in 42 markets, I think is going to be daunting. So you may have the operational cost of managing them individually on a local level.
It's hard, but they bring their best practices to bear and think that they can lift all boats. But what you're doing here is certainly more hyper-localized. Stan Kroenke, on your beat, he has teams in Denver, LA, Arsenal, and so every approach is a little different.
Yeah.
Right, and with the Kroenkes, they've got glitz and glamour. Kroenke Sports and Entertainment is now going to potential sponsorship clients saying, your logo could be in championship stadiums in London, Denver, Los Angeles, at the highest level of the most popular leagues in the world. And that's compelling.
That's a big advantage.
But as we were saying earlier about sponsorships, these are all very bespoke and very custom. And just because I want to sponsor Arsenal doesn't mean I necessarily want to have anything to do with the Los Angeles Rams. So it's easier said than done in some ways.
I will say these are sports moguls, so the fact that they're touching so many storied franchises, what they're doing here with Monumental, what Stan Kroenke's doing, what Josh Harris is doing, what the Fenway Sports Group is doing, it's really an interesting scale that they're operating on, and the way that they can touch global fans is pretty impressive.
Well, before we wrap up, what would you say to a quick round of buy, sell, or hold? You guys game?
Let's do it.
All right.
Do it.
More than half of minor league baseball will be owned by a single entity in 5 years.
Sell. The rules won't allow that.
I would say sell too. Okay. It's a lot.
I'd say hold. Those rules are the way they are until they aren't.
Every NFL jersey will feature an ad patch in 15 years.
Buy. I do think that inventory will be available for NFL teams for regular season games.
Buy. The media value of that is enormous.
I'm going to sell. I've heard from many people many times that if this ever happens, it's going to be after Roger Goodell quits.
Family ownership of NFL teams will be a thing of the past by 2040.
Sell. Families will still be involved in NFL team ownership as majority owners for sure.
I think buy. Honestly, the price tags of these things are enormous these days, and you can't just do it on a single family.
I'd say sell. The numbers are getting big and complicated, but the NFL has some world-class lawyers and financial advisors who can figure out a way.
Well, guys, I know this for sure. I'll be keeping score as the years go by, and we'll see you next time on Sports Business Journal Inside the Industry, presented by DXC Technology.